companies you discover because they are quietly brilliant, and companies you discover because the world has taken a very ugly turn and suddenly their product makes uncomfortable sense. DroneShield sits firmly in the second category. This is not one of those episodes where we pretend we spotted a future 10 years early, nod wisely, and congratulate ourselves on being clever. Counter-drone technology was not an elegant thesis in a white paper. It was dragged into relevance by cheap quadcopters, carrying grenades, phones taped to airframes, acting as targeting systems, and militaries realizing that billion-dollar assets were being stalked by toys. DroneShield exists because someone looked at that reality and decided to build the unglamorous tools needed to stop it. Not lasers, not sci-fi interceptors, not Hollywood solutions, radio frequency sensors, signal intelligence, software, and electronic denial. The kind of technology that does not photograph well, but works when things go wrong. And that detail matters, because this is not a story about disruption for disruption's sake. It is a story about defense catching up to physics, economics, and human ingenuity being used badly. From an investor's perspective, DroneShield is also inconvenient. It sits in that awkward space where revenues are real but lumpy, margins are attractive but fragile, and valuation has sprinted far ahead of comfort. The numbers are impressive enough to get attention, volatile enough to cause arguments, and tied closely enough to global instability that pretending otherwise would be dishonest. This is not a consumer story, not a SaaS fairy tale, not a linear adoption curve. It is a company selling insurance against a world we would rather not live in. And yet, this is exactly why it deserves examination. DroneShield is a pure-play counter-drone business listed on the ASX, operating in a niche that did not meaningfully exist a decade ago, and now cannot be ignored. It has moved from niche curiosity to defense procurement line item with alarming speed, fueled by battlefield validation, infrastructure protection contracts, and a steady drumbeat of uncomfortable headlines. The company's challenge is not explaining why its technology matters. The challenge is proving that this moment can be converted into something durable, disciplined, and repeatable rather than a single violent surge of demand. So this episode is not about celebrating the rise of defense technology, and it is not about pretending moral clarity where none exists. It is about looking directly at the products, the contracts, the balance sheet, and the reputation, and asking a very simple question that markets often avoid until it is too late. Is DroneShield a serious long-term business built for a permanently changed world? Or is it a very competent specialist riding a spike of fear and urgency? That is the lens. No hero worship, no panic buying, just a sober look at a company whose success depends on drones continuing to be a problem and governments continuing to admit they were not ready. Now, let's get specific. Strengths. DroneShield's primary strength is that it solves a real problem in the least theatrical way possible. This is not a company trying to win defense contracts by promising miracles. It is doing something far more defensible. It is meeting physics, economics, and battlefield reality, where they actually intersect. Drones are cheap, disposable, networked, and increasingly autonomous. Shooting them with missiles is absurd. Chasing them with aircraft is impractical. What DroneShield offers instead is control of the electromagnetic space those drones depend on. That decision alone puts the company on the right side of inevitability. At the technical level, the company's depth in radio frequency sensing and signal intelligence is its real moat. Radar and optics are useful, but they are visible, power-hungry, and often constrained by line of sight. RF detection scales quietly. It allows early identification, classification, and attribution, without advertising the defender's position. DroneShield systems are not just spotting drones. They are mapping protocols, control links, and behaviors, then feeding that data back into software that improves with use. This is one of the few areas in defense where software genuinely compounds rather than merely updates. That software emphasis matters financially. Hardware gets you through the door. Software keeps you there. DroneShield's command and control platforms, AI-enhanced RF analytics, and integration layers turn what could be one-off equipment sales into upgrade cycles, sustainment contracts, and long-term relationships. Defense buyers are conservative, but once embedded, they are loyal. Switching costs are not contractual. They are operational and political. A system that works during an incident is rarely replaced casually. There is also a strategic strength in what DroneShield does not do. It does not rely on kinetic interception. That keeps it aligned with civilian infrastructure protection, law enforcement, and domestic security customers who cannot fire weapons into the sky over airports, prisons, or public events. This significantly expands the addressable market beyond the battlefield. It also sidesteps some regulatory and ethical barriers that slow competitors who push harder, louder solutions. From a commercial perspective, the company's cash position is unusually strong for a business at this stage. A large net cash balance provides resilience against procurement delays, contract lumpiness, and geopolitical mood swings. It allows continued R&D without constant dilution and gives management room to think beyond the next quarter. In defense technology, survivability is not just about products. It is about balance sheet stamina. Reputation is another underappreciated strength. DroneShield is now a known quantity among Western-aligned defense and security buyers. Not a novelty, not a startup experiment. Systems have been deployed, used, iterated, and reordered. Battlefield relevance, even when discussed cautiously, carries enormous weight in procurement circles. It signals not just effectiveness, but institutional trust. That trust is slow to build and fast to lose. And DroneShield has so far managed it carefully. Finally, there is a structural strength that is easy to overlook. DroneShield is a specialist in a world of generalists. Large defense primes can outspend it, but they move slowly and sell bundles. Smaller startups innovate quickly, but struggle to scale or survive procurement cycles. DroneShield sits between those extremes. Focused enough to stay sharp, established enough to be credible. That middle ground is uncomfortable, but it is often where durable defense businesses are born. In short, DroneShield's strengths are not about hype or novelty. They are about alignment. Alignment with how drones actually work, how buyers actually buy, and how modern threats actually scale. That does not guarantee success, but it does mean the company is fighting the right problem, with the right tools, at the right time. Weaknesses. DroneShield's weaknesses begin where its strengths end, which is often how the most dangerous risks hide. The company operates in a market that is real, urgent, and growing, but also deeply uneven. Defense procurement does not scale smoothly. It arrives in bursts, pauses, revisions, and political reversals. Revenue can surge on contract wins and then flatten without warning. This makes forecasting difficult, operational planning fragile, and investor expectations easy to disappoint. A strong order book does not translate cleanly into predictable cash flow, and the market has a habit of learning that lesson the hard way. The valuation is another obvious pressure point. DroneShield is priced as if its current momentum is not just sustainable, but structurally permanent. That leaves very little room for execution error, delay, or changing procurement priorities. Even good news risks being insufficient. In this kind of setup, the company does not need to fail to hurt shareholders. It only needs to grow more slowly than optimism assumed. That asymmetry is uncomfortable, particularly in a sector where timing is largely outside management's control. There is also a concentration risk in what DroneShield does best. RF-based detection and electronic countermeasures are powerful today, because most drones still rely on radio links and known protocols. That advantage narrows as autonomy increases, pre-programmed flight paths improve, and encrypted or frequency-hopping communications become standard. DroneShield is not blind to this, but it does mean the company must constantly run just to stay in place. This is not a product that can be perfected and left alone. It demands relentless adaptation, and that carries cost, complexity, and execution risk. Scale is another quiet limitation. DroneShield is large enough to be taken seriously, but small enough to be exposed. Large defense primes can bundle counter-drone capabilities into broader systems, absorbing margin pressure in exchange for strategic positioning. Governments often prefer fewer suppliers, not more. DroneShield must therefore fight for relevance, contract by contract, integration by integration, without the luxury of being indispensable across multiple domains. That makes it vulnerable if a prime decides to move aggressively down market. Geopolitics, while a tailwind, is also a constraint. Export controls, regulatory approvals, and shifting alliances all matter. Being aligned with Western defense markets is an advantage until it becomes a bottleneck. Deals can be delayed, modified, or cancelled due to political decisions entirely unrelated to product performance. This is not a criticism of management. It is the cost of operating in defense. and it disproportionately affects specialists with narrower customer bases. Operationally, there is a risk that success itself becomes a problem. Rapid growth strains manufacturing, support, training, and integration capacity. Defense customers are unforgiving of failure, especially once systems are deployed in sensitive environments. Scaling too quickly can damage reputation faster than growing slowly ever could. DroneShield must expand without looking rushed, and that balance is notoriously difficult to maintain. Finally, there is an ethical and narrative weakness that does not show up on a balance sheet, but still matters. DroneShield's success is tied to the persistence of insecurity. It sells safety, but only because threats keep evolving. That does not make the business wrong, but it does make it emotionally and politically exposed. Public sentiment, regulatory scrutiny, and media narratives can shift quickly, especially as counter-drone technology becomes more visible in civilian spaces. Taken together, DroneShield's weaknesses are not signs of fragility, so much as reminders of the terrain it operates in. This is a company running inside volatility, not above it. The danger is not that it is doing the wrong thing. The danger is that the market may assume the right thing is always rewarded on time and in a straight line. Opportunities. DroneShield's opportunities flow directly from an uncomfortable truth that most governments are still only half prepared to admit. Drones are not a temporary problem. They are not a phase of warfare or a passing security fad. They are infrastructure now, and infrastructure can be abused. That reframes counter-drone technology from a tactical add-on into a permanent layer of defense spending, and it dramatically widens the field in which DroneShield can operate. The most obvious opportunity lies outside the battlefield. Airports, ports, power stations, data centers, prisons, border crossings, public venues, and major events all share the same problem. They cannot tolerate drones, and they cannot shoot them down. This is where DroneShield's non-kinetic approach becomes decisive. As more civilian authorities accept that drones are a safety and liability issue rather than a novelty, counter-drone systems move from discretionary purchases to regulatory requirements. When that shift happens, adoption accelerates quietly and persistently, not explosively, but reliably. There is also a long runway in fixed-site protection. Temporary deployments are useful, but permanent installations are where recurring revenue lives. Fixed sites need upgrades, software updates, sensor replacements, integration with broader security systems, and ongoing support. This favors companies that are already embedded and trusted. DroneShield is increasingly positioned as a system provider rather than a device vendor. And that opens the door to multi-year relationships instead of episodic sales. Software remains the most powerful compounding opportunity. As detection libraries grow, signal databases expand, and AI models improve, performance gains do not scale linearly with headcount or manufacturing capacity. They scale with data and experience. Each deployment improves the next. This is one of the few areas in defense where learning curves genuinely matter. If DroneShield continues to prioritize software intelligence and command and control integration, it can defend margins even as hardware becomes more competitive. International alignment is another lever. Western defense cooperation is tightening, not loosening. Interoperability, shared standards, and trusted suppliers are becoming more important than price alone. DroneShield benefits from being politically aligned without being a national monopoly. It can sell into allied ecosystems without triggering the same sovereignty concerns as larger foreign primes. That middle position is strategically valuable as procurement frameworks evolve. There is also an opportunity in education and doctrine. Many buyers still do not fully understand counter-drone capability limits and trade-offs. Companies that help shape how threats are defined and mitigated often shape the market itself. DroneShield has a chance to influence standards, best practices, and operational assumptions simply by being early, visible, and technically credible. That kind of influence is subtle, but it lasts. Finally, there is a broader structural opportunity tied to cost asymmetry. As long as drones remain cheap and targets remain expensive, demand for electronic countermeasures will persist. This is not a problem that innovation solves away. It is a problem that must be managed continuously. DroneShield does not need drones to become more dangerous to grow. It only needs them to remain inexpensive, accessible, and adaptable. On current trajectories, that is a safe assumption. In essence, DroneShield's opportunity is not explosive expansion driven by a single conflict or contract. It is steady normalization. Counter-drone capability becoming as unremarkable and as necessary as perimeter fencing, access control, or cybersecurity. If that transition completes, DroneShield's addressable market stops being episodic and starts being structural. Threats. The greatest threat to DroneShield is not technological failure, but strategic compression. Counter-drone capability is becoming too important to ignore, which means it is also becoming too important to leave to specialists forever. Large defense primes do not rush into niches when margins are uncertain and standards are fluid. They wait once the threat is fully institutionalized and budgets stabilize. They move decisively, bundling counter-drone functions into wider air defense, base protection, and command systems. When that happens, pricing power shifts, procurement preferences consolidate, and specialists are forced to defend their relevance inside someone else's architecture. Technology, evolution itself, is another persistent pressure. Drones are not standing still. Autonomy is increasing. On-board decision-making is improving, and reliance on continuous RF links can be reduced. Pre-programmed routes, vision-based navigation, mesh networking, and encrypted control protocols all chip away at the effectiveness of RF-centric approaches. DroneShield can adapt, but adaptation has a cost and a lag. The danger is not sudden obsolescence. It is gradual erosion, where performance remains good enough today, but less decisive tomorrow, requiring ever greater effort to stay ahead. Regulation is a quieter but equally serious threat. Counter-drone systems operate in crowded electromagnetic environments. jamming, and signal interference are politically and legally sensitive, especially in civilian settings. Governments may simultaneously demand protection while restricting the very tools needed to deliver it. Shifting rules around spectrum use, liability, and civil aviation safety could slow deployments or limit functionality. Compliance is manageable. Ambiguity is not. Unclear rules create procurement paralysis. There is also reputational exposure inherent in success. As counter-drone systems become more visible, failures become more public. A single incident where a protected site is breached can undo years of credibility, even if the failure lies outside the system's design envelope. Defense buyers understand nuance. Public opinion does not. This is a business where perceived failure can matter more than statistical performance. Financially, the threat of expectation mismatch remains ever present. High valuations amplify normal business risks into market events. A delayed contract, a smaller than expected follow-on order, or a shift in spending priorities can trigger outsized reactions. This feedback loop can affect morale, hiring, and strategic flexibility, even when the underlying business remains sound. The market does not always distinguish between volatility and deterioration. Geopolitics cuts both ways. Today's alignment can become tomorrow's constraint. Export controls may tighten. Alliances may shift. Domestic procurement rules may favor local champions over trusted partners. None of this reflects on product quality, yet all of it affects addressable market access. Specialists feel these changes more acutely than diversified primes. Finally, there is the threat of normalization. The more counter-drone technology succeeds, the more it risks becoming boring. Once it is seen as standard infrastructure, pricing pressure increases, differentiation narrows, and procurement becomes cost-driven rather than capability-driven. That is the paradox DroneShield must manage. It needs the market to mature without commoditizing the very expertise that justified its existence. In short, DroneShield operates under a constant ceiling of pressure, from larger competitors above, from faster-moving threats ahead, from regulators beside it, and from market expectations below. None of these threats are existential on their own. Together, they define a business that must execute continuously, visibly, and without complacency, simply to remain where it is. Conclusion: DroneShield is not a comfortable company to analyze, and that is precisely why it is worth analyzing. It sits at the intersection of genuine technological competence, geopolitical anxiety, and market enthusiasm that has already run far ahead of certainty. This is not a story you approach looking for elegance or inevitability. It is a story about adaptation, timing, and whether a specialist can remain indispensable as its niche hardens into doctrine. At its core, DroneShield has done the difficult part correctly. It identified the right problem early, chose the least theatrical but most scalable solution, and built credibility in an industry that is deeply skeptical of novelty. Its products work in environments where failure is not theoretical, and its customers return not because of branding, but because replacement carries risk. That alone places it ahead of many defense-adjacent companies that mistake attention for validation. The question that remains is not whether counter-drone technology will be needed. That argument is already settled. The question is whether DroneShield can convert urgency into permanence, whether it can transition from being a fast-moving specialist into a quietly embedded layer of security infrastructure, whether software, data, and integration can continue to outpace commoditization and bundling by larger players, and whether management can navigate growth without letting the business become defined by volatility rather than capability. For investors, this is not a binary proposition. DroneShield does not need to dominate the market to succeed, but it does need to defend its position relentlessly. The balance sheet provides time. The technology provides relevance. The market, however, provides no forgiveness. Expectations are high. Patience is limited. And defense cycles rarely move in straight lines. In the end, DroneShield is best understood not as a bet on conflict, but as a bet on asymmetry. As long as small, cheap, intelligent machines can threaten large, expensive systems, someone will need to manage that imbalance. DroneShield has built itself to do exactly that. The risk is not that the world becomes safer. The risk is that the market assumes this moment will look the same 5 years from now. For TechEye Spy, that makes DroneShield a serious company in a serious category, deserving of scrutiny rather than celebration. Not a hero, not a villain, but a highly competent response to a problem that is not going away.